Hello, everyone. It's great to have you back with us. Welcome to episode 152, Crazy Capital. And I'm here with Sammy. It's great to have you.
Thank you, Peter. Happy to be here.
And yes, Sammy and I have agreed to set our differences aside today, even though my alma mater, SMU, did take down her Miami Hurricanes 26-20 in overtime.
I've moved on.
I mean, I don't know about that.
Always love my Canes. Go Canes.
A historic win for the Mustangs, by the way. I was there in person, soaking in every single second.
Jealous.
Oh, you should be. But now onto an entirely different kind of history. We've got a major announcement. The U.S. Mint, as of 2 days ago, has officially stopped making the penny. So RIP the penny.
RIP.
So given that it costs nearly 4 cents to make 1 penny and also nearly 14 cents to make a nickel, so not a great ROI, but also a fun fact, the very first U.S. Mint facility was here in the great city of Philadelphia, city of brotherly love.
Wow, I didn't know that.
I know. But speaking of Mint, Sammy, this podcast is Mint Value because we are diving into the biggest stories shaping institutional investing right now.
Let's do it.
Let's get after it. So for job changes, Daniel M. Holzer transitioned to UBS from Morgan Stanley, where he served as a financial advisor in New York City, where you used to live.
Yes, 4 years.
Wow. 4
Great
years.
city.
Yes. But you like Philly better, by the way.
I do.
Yes.
It's more manageable.
So Daniel is now a senior vice president. He continues to operate as a generalist, providing comprehensive financial strategies and wealth management solutions to a diverse client base. Joseph Pigott transitioned to Flynn Financial Partners from LPL, where he served as a financial advisor again in the city that never sleeps. Now a financial advisor with Flynn, he operates as a generalist, bringing 24 years of experience in the retirement industry to his role. I mean, 24 years. I mean, I'm 24, so that's obviously a huge breadth of experience, knowledge that he's bringing. So best of luck, Joseph. Now, Greg Webster transitioned to Eagle Strategies LLC. By the way, cool name for a firm.
I love that name.
As president and chief executive officer, very patriotic too. Bringing over 25 years of experience in insurance, wealth management, and banking. Based in New York City again, he serves as a generalist, leading the firm's strategic growth and overseeing its wealth management operations. Before joining Eagle Strategies, Greg held senior leadership roles, including senior managing director at Headwaters I, SCLP, and president and CEO of HSBC Brokerage USA, Inc. He holds a Bachelor of Science in Marketing from Arizona State University and an MBA in Finance from Long Island University. So, Sammy, what's going on the wealth management side of things?
Let's get into it. Thank you, Peter. OneDigital Investment Advisors acquired Atlanta-based Signature Wealth Management Group, which had $402 million in regulatory AUM as of its most recent Form ADV, filed in March. OneDigital has over $149 billion in assets under advisement and recently received a majority investment from Stone Point Capital and CPP Investments.
Sounds like a major stepping stone, no pun intended.
Next, we have the $38 billion RIA Lido Advisors, backed by majority owner HPS Investment Partners, as well as Constellation Wealth Capital and Charles Bank Capital Partners, acquired Warren, New Jersey-based Fountainhead Advisors, which has over $1.2 billion in regulatory AUM. Fountainhead also operates an office in San Ramon, California. Next, we have a $3.3 billion RIA Santa Monica, California-based Abacus Wealth Partners, acquired San Francisco-based RIA Milestone Financial Advisors. Milestone was founded by advisor Aaron Weiner, who joins Abacus as a partner and financial advisor, and reported $70 million in AUM in its most recent Form ADV.
I mean, obviously, a lot of interesting stuff right now. Maybe Aaron Weiner's been in Napa Valley with that last name.
Yeah, but, that's a good one.
So going on, I mean, also it's really interesting right now, like we're seeing a lot of acquisitions on the RIA side of things, and just clearly shows this major growth, this huge appetite for fiduciaries, and a lot of rolling up right now. And there's been a lot of rolling up of banks as well. But now we're going to be talking about investments in searches. So this one's not a pension fund. It's a little different here. The World Bank out of Washington, D.C., which has an 86 billion AUM, which is obviously just mammoth.
Mm-hmm.
The World Bank Group's International Finance Corporation, and boy, that is a mouthful, committed $100 million to growth investor Everstone Capital's strategy of investing in middle market companies across India and Southeast Asia. And India is just, it's a country that's just seen tremendous growth. I think its GDP the last few years has been growing at 6 to 7%, whereas US GDP since World War II has been increasing like 3.5%. So, just to put that in context, that is a major disparity in India's growth in, pharmaceuticals, food, the way they've modernized and completely overhauled their seaports is just nonetheless amazing.
Yeah, we have a podcast coming out about India and their investment landscape soon.
I'm very excited. I was in it. It's coming out November 21st. Of the total allocation, roughly $60 million will be injected to the Indian firm's fifth fund, which is targeting $800 million, while the remaining amount will be used for co-investments. And now we're going south to Louisiana. The Teachers Retirement System of Louisiana, which is based in Baton Rouge. I used to go to school in New Orleans, fun fact. It has a little over $27 billion in assets under management. It uses AON and AON again as a general consultant and private credit consultant respectively. So they approved private market commitments of up to $125 million to Overland Advantage and up to $100 million to Hart Capital Fund 5 as recommended by Hamilton Lane. The pension also outlined timelines for several 2026 searches, including for investment, consulting, U.S. and global fixed income, emerging markets equity, index management, and U.S. mid-cap growth mandates. And one thing I find just really rather interesting is when people talk about fixed income these days, it's in the context of private credit, whereas I feel like previously
Right.
it was really about bonds, which is definitely interesting to think about, just kind of the difference in the language over the years.
Mm-hmm.
And now we are going back to the Washington, D.C. area. Arlington County Employees Retirement System, which is just right outside D.C., which has a little over $3 billion in assets under management, and it uses Windmark Investment Partners as a general consultant and a private credit consultant. So really leaning on them. They unanimously approved a $185 million investment in the Neuberger Berman multi-sector fixed income strategy, another mouthful right there, reallocating $80 million from the NTGI Aggregate Bond Index Fund, $70 million from the NTGI Value Index Fund, and $35 million from Orbis International. So a lot going on there. Sammy, what's going on in the searches side of things? I'd love to kind of hear more about that.
Yes. So on the searches side, going back to Baton Rouge, the Teachers Retirement System of Louisiana. In addition to commitments, the pension also outlined timelines for several 2026 searches, including for investment consulting, U.S. and global fixed income, emerging markets equity, index management, and U.S. mid-cap growth mandates. Next up for searches, we have Fondo Telemarco. They're based in Rome, Italy. So Italy's Fondo Telemarco launched 2 RFPs seeking managers for $159 million private debt multi-strategy mandate targeting European investments with a minimum 1.3 times net cash multiple and a $24 million private equity secondary allocation across its prudent and dynamic compartments. The pension will accept proposals for both RFPs until November 24th. Now, Peter, what does this all mean? Can you tell us what Dakota's strategic takeaways are for GPs and LPs?
Of course, but also I just want to say, it's interesting how that, when people were talking about prudent and dynamic, because those are, 2 of your favorite words, you use them
Your
all the time.
favorite words.
But so what's going on here? There's a lot. So strategic RIA expansion is centered on scale and specialization. Recent deals from OneDigital Investment Advisors, Lido Advisors, and Abacus Wealth Partners highlight a shift toward targeted growth, not just adding AUM, but deepening expertise in specific client segments and regional markets. And I think that's one of the things with RIAs. When you have someone that's fiduciary, you want just a deep set of knowledge as it relates to where you want to invest, whether it be in an area topical like defense or tech or energy, something that has really a breadth of knowledge and very kind of specific, intricate knowledge. The industry continues to reward RIAs that can balance scalability with personalized, high-touch service, often backed by institutional capital and technology-enabled infrastructure. And again, right now, what we're seeing, the huge demand for modernizing infrastructure, especially from the perspective of injecting private capital into it to revitalize it and leveraging technology in that process. And number 2, global allocators are targeting growth and diversification through private markets. The World Bank's commitment to Everstone Capital and Louisiana's TRS allocations to Overland and Hain Capital demonstrate ongoing, and one of my favorite words right now, appetite for global private equity and credit exposure. LPs are using private markets to achieve both yield and geographic diversification, and I think we're seeing a lot of like this push for geographic diversification this year. Again, people are trying to disentangle trade with China right now. I think that's a really topical piece right now, and which this signals confidence in long-term value creation across emerging economies and niche strategies. I think everyone likes to talk about like what is the next emerging economy, what's the next like India, what's a country that's really scaling and really bolstering its supply chain and its overall economy. And so number 3, institutional search activity reflects a broader demand for customization and innovation. And obviously at this juncture, there's a huge push for being innovative, customizing, creating an investment strategy that tailors to the needs of your clients. And I think that's something that's really popular and really prevalent. New RFPs from Louisiana TRS and Italy's Fondo Telemarco show that investors are refining mandates across asset classes, from private debt and secondaries to global equities. So just a broad range, just broadly, with an emphasis on flexibility, ESG integration, and precise portfolio fit. Consultants are playing a pivotal role in shaping these mandates to align with evolving institutional priorities. And so, Sammy, you ask, what's the bottom line?
What is it?
Institutional investors and wealth managers alike are prioritizing strategic depth over scale. Okay. Focus on what you can control, building portfolios and platforms that emphasize specialization, customization, and durable growth. For GPs, aligning with these evolving priorities through transparency and targeted value creation will be critical to winning capital commitments in 2026. Wow. Sammy, some really riveting stuff right here. What's going on the fundraising side of things? I would love to hear that.
Yes. So San Francisco-based venture capital firm Root Ventures has so far raised $190 million for Root Ventures Fund 4, which has a target of $250 million. The successor to the $150 million Root Ventures Fund 3 reportedly received commitments from the University of Chicago, Adams Street, DuPont Trust, and Brown Advisory. According to Dakota's data, the fund received $25 million from the New Mexico State Investment Council and will target seed and pre-seed funding rounds of deep technology companies, allocating $2 to $3 million for each transaction. Now, amid the growing noise in the private credit market fueling concern among investors, KKR maintained its fundraising target of more than $300 billion between 2024 and 2026, drawing confidence from the performance of its funds in the third quarter of 2025. Lastly, we have Glasswing Ventures raised its largest fund to date with the $200 million closing of Glasswing Ventures Fund 3. Marking an oversubscription from a $150 million target. With backing from new and existing investors, Fund 3 will target pre-seed and seed stage investments in startups developing enterprise applications, cybersecurity innovations, and artificial intelligence native systems. Now, Peter, will you tell us what the upcoming Dakota Cocktail events are?
Of course. And before I do that, I just want to say I think Glasswing Ventures, their investments, it's really interesting, especially the push for artificial intelligence native systems.
That's huge right now.
No, definitely. And cybersecurity innovations, as someone that used to work in cybersecurity, I mean, the push to really foster cyber resiliency and bolster our cyber infrastructure is huge. Mm-hmm. It's extremely topical. There's a lot of government backing. There's a lot of private capital backing, and really just ensuring that, our critical infrastructure like banks, schools, and hospitals are insulated from cyber breaches. So I think that's really, really just a growing field right now, a budding field. But yes, Dakota Cocktails, we have one 6 days from now on November 20th.
We will be there.
We will be there. I'm very excited for it. Sammy, can't stop talking about it. And it's at the Union League. So very exciting stuff.
In Philadelphia.
Yes. Thank you for coming out, Sammy.
Thank you, Peter. This was fun.
Thank you, guys.
Bye.
This episode is brought to you by Dakota Marketplace. Are you tired of constantly jumping between multiple databases and channels to find the right investment opportunities? Introducing Dakota Marketplace, the comprehensive institutional and intermediary database built by fundraisers for fundraisers. With Dakota Marketplace, you'll have access to all channels and asset classes in one place, saving you time and streamlining your fundraising process. Say goodbye to the frustration of searching through multiple databases, websites, Form ADVs, and say hello to a seamless and efficient fundraising experience. Sign up now and see the difference Dakota Marketplace can make for you. Visit dakota.com/Dakota-Marketplace today.